Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and we're watching history unfold in front of us this morning. And it's just a truly amazing point in time. I'm going to go a little bit slow here. I'm going to watch the markets as people begin to filter in. We are starting a little bit late this morning. What I want to do is first take a look at the news, take a look at the headlines. I was expecting a press conference last night. I guess it was more fake news that the president was going to have a Oval Office press conference, which never happened. And I'm not really sure what he's going to be able to do, what the Federal Reserve is going to be able to do. But you could bet your bottom dollar they're going to have to try something fairly quick, because when you take a look, and I went over this with members last night on our members in a circle, that one of my concerns was the polls. And what I'm watching for in particular are declines. This is predicted. These are the stats for the next election, presidential election. And you're watching the president's numbers come under some pressure, not a ton of pressure, but some pressure. We were rising late last week, early this week. Now we are beginning to pull back off of those highs, with Bernie losing support and Biden picking up support. So either way, you don't want any of these two guys in office, particularly Bernie. And I'm not saying that from a political perspective. I'm saying that from a economic perspective. Because if you think there's debt under President Trump, you have under a Bernie presidency, to a lesser extent Sanders, to a lesser extent Biden, you're going to see debt like you've never seen before. So watch for the president's poll numbers. If he begins to really break support here, you're going to see it begin to get priced into the market, and this becomes a truly scary event. And I'm not seeing much this morning. I scrolled through this earlier. And again, folks, I'm trying to kill time here, allowing people to fill in. Good morning, everyone. And I'm not really seeing anything per se with regards to the coronavirus. Now, this is just an impact on Chinatowns in each city, but nothing really. This has been out for a while. Nothing really new here. So it looks as though the news flow has dried up a little bit. Good morning, Richard. We were just here, right? Not too long ago. Here we are, back again. So let's get to, we have roughly about 10 people on right now. Let's go one more page here to the charts. And I'm looking for also news with regard to the Persian Gulf. You have the Russians and the Turks really picking up the heat in their battle over in Syria. You have the Turks trying to shoot down Russian jets. The Russians killed 22 Turks yesterday, somebody downed 3 of their drones over in Libya. I don't think it was the Russians. So things are heating up. I don't know what the Turks are doing in Libya, but they're there. And this all goes back to the price of a barrel of oil. Heat up the tensions over in the Persian Gulf, get the price of a barrel of oil moving up higher. It's not enough yet, and I'm not seeing anything in terms of headlines here to make me want to talk about check out what's going on over in Europe. Italy under lockdown. I don't see Sam on yet. Good morning. Hello. Long time. Let's see. Yeah. Welcome aboard. Uh, Coronavirus. West Germantown puts 1,000 people on quarantine. Not a whole bunch of news flow, either out of the United States or out of Europe. And it's eerily quiet. It's eerily quiet. Let's get to the charts. Okay, let's kick things off with the Russell 2000 this morning. We were down lower. We are picking up off the lows of the day. We're down about a half percentage point. We noted this yesterday. RSI is trending up higher, and that trend continues. Nothing's changed since yesterday, despite all the damage that's been done to this market. And I mentioned yesterday, we can't trade off of it, but it's an observation worth noting. We went over last night on the inner circle where support levels might be in this market. I think a couple of them we've already taken out this morning. The NASDAQ hit support and we bounced. Again, higher lows on RSI. Let's get rid of this. I don't care about this. Let's remove. I care about us hooking up here. So we're beginning to double bottom out, higher low. We'll see whether or not the support level holds at around, again, 8,200 on the NASDAQ 100. Let's take a look at the S&Ps. S&Ps down nearly a percentage point. Richard, good morning, Cherry. I think the exaggerated scenes of the Iranian health minister being sick on TV is just a show to help ease the sanctions. Could be. Could be. I saw a market big correction. Dow Jones will go down more further. Do you think the Fed? The Fed will probably go down to just shy of zero. You know what good it's going to do? I think it's going to be the value of those rate cuts are simply to break the selling momentum, and that's about it. I don't see what value the Federal Reserve cutting rates even further is going to bring to the markets, with the exception of a little bit of relief, very, very short term. But when they're firing off these bazookas of rate cuts, they don't have many arrows left in the quiver. So, as they cut rates, and I wouldn't be surprised if they did a surprise meeting today and cut rates, but especially ahead of a weekend, I don't know the value of it. I think it's going to be short-lived, and what it's going to do about the spread of the coronavirus and its impact on the supply chain, not quite sure. So, if anything, the value that we see is a break in the momentum, the selling momentum. Thanks for that, Jerry. Tenor watching, he should have at least 9 thumbs up. He's giving good info. Thank you very much. Appreciate that. So you can see here as well on S&P 500, we continue to trend up higher here. And now we're beginning to move up off the lows of the session. We have a little W formation going on. So it looks as though we have some buyers moving in here. to buy the dip. Do we open off the lows here? Not quite sure. I mean, anything's possible nowadays, but we're going to get some sort of intervention. The federal government, with the exception of the press conference the other day, that was it. There's been nothing. At some point, Mnuchin's going to get the phone call if he hasn't already got it already. And for those overseas, Mnuchin is our Treasury Secretary, and they're going to get the plunge protection team in here and orchestrate a short covering rally. Again, will it resolve the issues? No. I mean, we have structural issues here. And the supply chain issues, we don't even know what those are going to be yet. We can only forecast. I've lost all access to the members in the circle. Mark Ram. No, Chris, we'll take a look at that for you, pal. Good morning, Germano. What do you think the bottom floor for technical analysis? Dow, S&P 500. Longer term, I can only speculate. Short term, I think that with regard to the markets, Dow, S&P, we're extremely oversold at current. Can we go lower? Absolutely. Absolutely, we can go lower. On a daily basis, S&P 500 at current is sitting with RSI at 18.79. That's the S&P 500. So you have 500 mega caps, the largest 500 companies in the world. And we have RSI down below 20. That's unsustainable, for the longer term. Can it last here for a couple of trading days? We're coming off of historical levels, overbought levels, fundamental levels, cost-wise, valuation-wise, price to sales. These companies are at historic highs, or were at historic highs. Some of the froth has come off, no doubt. And we've been talking about the technicals for weeks now. The sell-off is no shock. The magnitude, I wish I could say the magnitude I predicted. I did not. I didn't predict this. Do we predict a sell-off? Yeah, we predicted, sure. Is this a bottom? We're close to it. For the short term, we'll get a bounce. Ultimately, do I think we're going lower? In all probability, yes. And we're probing, this is a weekly chart of the S&Ps, we're probing historical support levels now. And we are, for the most part, we have given back. We're falling back down into the base prior to the October breakout, right here. We have given it all back. Everything gained since October, we have given back in the past couple of trading days. So we're falling back down into a base. I think that ultimately 2,800 in that ballpark is going to be support. So we have some more downside here to go before I would want to step in here and say, okay, it's time to start buying the dips. On an intraday basis, individual stocks, sure, we could step in and look for a short covering rally, but it looks as though we have more downside here. What else do we have? But what is concerning here is that our theory on the market bubble is correct. Yeah, but well, you just brought it up. The real sell-off is in the NUGT and the GDX. As far as we're down right now, Germano, in the pre-market, no, I'm not going to sell into panic right now. Not right now. No. I think we sold a lot of our. Let's go to the NUGT. Let's go to the pre-market. You know, we are $25 per share is a major technical support level on the NUGT. So if anything, we booked a lot of profits earlier in the week, late last week on NUGT. We did begin to rebuild the position at higher prices, but we'll be looking to load back up at these levels. So I'm not looking to lighten up any further. I mean, if you would have asked me the same question last night, absent this morning's sell-off, I might have said, you know what, yeah, maybe, but we're already down another, 2 points this morning. So that would be selling into panic, and I'm not going to do that. I'm not going to let emotions take over here. So, no, I have no plans to lighten up just yet. Last day, February, huge bar on monthly chart. Yes, I don't see how buyers could step into GDX. It's difficult. I agree. I think that if we get a rally in the markets, you're going to get a rally in the miners. At current, they are trading in conjunction with the overall market. So if we get a rally in stocks, we'll get a reprieve on the gold mining stocks. Everything's just the correlations that we've come to expect to exist, meaning a fall in the U.S. dollar, a rise in gold did not help, and a rise in yields. A drop in yields did not help the miners yesterday. Well, that correlation was busted, but that's not going to stay busted. Correlations eventually rebuild. Can they disconnect for a few days? Sure. Can it happen for a couple of weeks? Sure. But you need to remain liquid. The key to surviving this is to have your capital reserves, and we have them, and we're going to try to take advantage of this because, frankly, when you take a look, and I was mentioning this last night to one of our members because we had a big inner circle last night, and I want to bring up something. And this is for the benefit of those that are looking to buy the miners. And I want to overlay. Let's go to the yield curve. And if what we're seeing here is accurate, there could be a steepening of the yield curve at play here. And that's when things get real ugly real fast. So here's the month. This is a monthly chart of the 2s versus 10s yield curve. And what we'll do is we're going to overlay the GDX we'll put it behind the price. We'll make it purple because why not? We'll make it purple. All right, so when you go back, as a matter of fact, the GDX is not going to do it. We need to use, because there's not enough data here, historically, we'll use the index, the gold mining index, the GDM, to illustrate. And you can see that as the yield curve steepens, this is 2000, this is the financial crisis, here we are today. The yield curve is beginning to steepen. We were lower on the month. We are now higher on the month. And you can see that the S&P sells off once you begin to steepen, as do gold stocks, to a lesser extent gold, obviously. And then all of a sudden, the two begin to trade in tandem. So there's a lag when the yield curve steepens. So we may see, you saw the same thing here. Here are gold stocks. They sold off a little bit as the yields steepened, or the yield curve steepened, and we're probably seeing the same thing right now. a bit of a lag on the gold stocks to play catch up with gold. And I think I just saw somebody say that gold is down as well. Yeah, it was pulling back earlier. Now we're still down on the session, but we're coming off the lows. So I think that what we're seeing with the gold stocks is that people are so over leveraged, whether it be on consumer debt, whether it be on revolving credit, whatever. People are levered up and they're deleveraging. When you deleverage, you sell whatever you could sell. And we're seeing that reflected right now in the gold stocks. To a lesser extent, gold. But think about it. Gold is down. Talk about safe havens. Gold is down. And that's because you're just seeing people sell whatever they can sell to meet margin calls and fear. Fear is a far greater motivator than what is greed. Taking a look at the US dollar, the dollar is just getting annihilated. And what's doing well? The euro and the yen. And they're arguably being more impacted than we are by the coronavirus. Yet their currencies are behaving stronger than ours. Go figure. Talk about a tell. And the dollar's down, yet gold and the miners are down. That's not going to last very long. Remember that gold is priced in US dollars. So while I don't think that we have a great buying opportunity on our hands here with regard to the gold mining stocks, I think it's an opportunity. But I would just stay small. I think that's the key to surviving this right now. Is that's fine. Go in, speculate, take advantage of extreme oversold conditions, but just don't tie up your capital reserves 100%. Leave a little bit of room to take advantage of these opportunities. Now gold already bullish, and yeah, gold is in an uptrend. There's no doubt about that. Granted, I agree with the observations I believe I saw in the comics here that we have a major bearish candlestick on the week and on the month. Let's see how we close out the day. And I'm talking about the gold miners in particular. Now, one area that I'm watching here as a potential short is palladium. We're watching this very, very closely. We're beginning to weaken up here. Nat gas, absolutely annihilated today. We're down 3 3/4% on the session. We're coming off those lows now. And you may be finding it a bit odd that I don't have a lot more worry in my voice. And I think I had more worry in my voice last night with members. But when you wake up and you see red futures, a lot of panic out there, and have no doubt this is a panic. More than likely, that's you're far more closer to a bottom than when you wake up after a huge sell-off like this and you see futures bright green. You don't want to see that. That's not capitulation. So we may be seeing short-term capitulation here. I would just be careful of that 2 p.m. hour, because that's when the margin calls come out hot and heavy. And if people don't have funds added to their brokerage accounts to meet those margin calls, you have forced liquidation. And these, you got to remember, if you're on margin, you are not, and I repeat, you are not the major partner in that relationship between you and your broker. Your broker is the boss, and they will sell whatever they can sell to meet margin requirements. Oil beginning to bottom out here. What we're looking for is a failure to continue to make new lower lows. And I thought we were seeing that yesterday. And that didn't pan out. We're beginning to see it now. Might this be the beginning of a bottom? Can't speak today. Perhaps. I think that RSI is sending us a signal. We're beginning to hook up here on oil, assuming that this bar holds. And remember, This bar only opened up 45 minutes ago. This will close at 9 a.m. That one candlestick. What else do we want to go over here? Check out our NUGT. Continues to weaken up here. I think that ultimately we're coming down to 25 on NUGT. That's where historical support is. Dollar trying to rebound here. Here's the euro. Simply in fuego. For illustrative purposes, you want to talk about candlesticks? Here's the euro. Major league breakout. We didn't crash up between just above one resistance level. We did above 1, 2, 3. Now, I think what's going to happen here next week is that we're going to get a pullback on the euro, and they're going to do a retest of this prior, assuming that we close above it this week. We're going to do a retest of the support level. That'll give the dollar a brief reprieve. And if this holds on a retest and we see a continuation move higher, you're going to see the US dollar go into free fall. Let's check out bond prices. Where our 10-year, here we go. So treasuries continue to rip up higher here. I am not bullish on treasuries. I mentioned this last night. I think that we are seeing signs of topping action on the daily chart. We're very extended here. And when money comes out of stocks, you're going to see treasuries drop like a rock. I think I just may have misspoken. Let me repeat. I'll try to repeat. When we see money go rotating back into stocks, you're going to see treasuries drop like a rock. And if I'm repeating myself, I apologize, but I think I misspoke. You can see that we were extended into the upper band of the rising uptrend channel. We backed off. We're also leaning into the third standard deviation Bollinger Band on a 4-hour basis. We're doing the same on a weekly chart as well. NASDAQ trying to hold support here. A very fluid situation, very volatile. Gold rebounding a bit. I'm not going to be satisfied with gold until we close above, at a bare minimum, 1640. And that's right here. And what we may be setting up for is a W formation on gold. Here's the lower band of support. And if we break out above this pivot point here at 1663, you're going to see a continuation move higher on the price of gold. But right now it remains weak. We're putting in lower highs and lower lows. But we're consolidating. Relative to the overall market, we're consolidating here. So again, I'm not looking to immediately put money to work in the gold mining space, but it's going to come fairly soon. I mean, so much damage has been done, a lot of technical damage. At some point in time, if gold begins to break out, you're going to have to buy the miners. Let's check out the GDX. Okay, the miners are catching a bit of a bid. This is the GDX now. RSI's oversold, but nowhere near enough for me to say this is an extreme oversold condition. So we're bouncing back. I'm not convinced yet that we have a bottom here on the miners. I think we have support immediately below. Yeah, we came very close to bouncing off of it earlier, just a couple of pennies away. So we'll keep an eye on this $27 support level on the GDX. And if we decide to enter the trade, add more to the gold mining position, we will send out an alert. And with that, folks, I'm going to say everybody, I want to say everybody have a profitable trading day as I normally do. And I'll say that, but I think right now it's a matter of, keep those capital reserves at the ready and try to avoid being on margin right now. Because again, your broker becomes a senior partner, and when you're on margin, you get margin calls and whatnot. It clouds your judgment. Don't allow debt to cloud your judgment. And everybody have Trent. Everybody have a great trading day and a good weekend. And if you can hit that like button, I appreciate it. Thank you and be well.